Welcome back, Chapter 20, Example 3. So, this one is retrospective application with tax. And again, remember, the questions won't say that. You're going to have to read through and go, what is this? So, let's do that. In 2022, Bergeron Construction Company applied the completed contract method of accounting for long-term constructions. However, in 2023, they discovered percentage of completion method should have been applied instead. Okay, so that should have, what does that tell you right away? If you should have done this instead, that's an error. So we have to do retro. For tax purposes, the company uses the completed contract method and will continue to use this because that's the cash flow. Bergeron follows ASPE and will apply the percentage of completion method in 2023 and in the future. They use DIT method of accounting for income taxes and subject to the rate of 30%, and the change is on the next page. So, let's go to page 7. So, this has different pieces. So you'll notice sometimes they give you information in different ways on the question. That's why it's important to do as many questions as you can in this chapter. So, percentage of completion is here. Sorry, that table didn't line up very nicely. So we are going from here, completed contract, to percentage of completion. And this is for taxes. And it stays that way. Okay, so let's see what they want us to do. We already know that it is an error, so we're going to adjust it retrospectively. So calculate the net income to be reported in 2023. So we're looking at 2023. We know we're going to use percentage of completion. So, our pre-tax net income, notice it's pre-tax income, is going to be $700,000. Then we have to take off the CIT expense, which is $480,000. Sorry, lost my train of thought. Times 0.30. Okay, I'll be using the 700,000. That's accounting income. So remember, this is accounting income. We need taxable income, and taxes are based on the completed contract method. So this is taxable income. So that's going to be 144,000. Remember, we're subtracting it, put brackets around it. But you notice there's a difference between completed contract method and the percentage of completion. So this is our accounting, this is the tax base. So we're going to have an FIT expense. Or benefit, we'll have to. So we know it's 0.3 times the difference. So that part's easy, 700,000 minus 480. So we know it's 66,000. So we're not sure if it's an expense. So we have to think about it. This represents income, okay, or revenue. So future you, are you going to have more revenue in the future or less compared to the accounting guy? You're going to have more because they put all the revenue here. So there's more revenue in the future. So more tax. So is that a good thing or a bad thing? Are you happy or sad if you have to pay more tax in the future? You're sad, so it's a liability. So that means this is an expense. So we're going to be subtracting it. So that's just bringing you back to the income tax chapter. Hopefully that didn't hurt your brain too much. So now we need to record the necessary entries in 2023 to adjust the accounting records from 2022. Okay. So here's the differences between the two methods. So over here in 2022, there's a $200,000 difference. So this is the difference. Adjusting. So is net income going up or down? Net income's going up. So credit retained earnings. So we're going to have a couple little things. Now, do we have to adjust CIT from last year? Well, no, because it was right, because we used completed contract. The tax base hasn't changed. So that's what I'm saying. CIT hardly ever gets revised. Well, I mean, unless it was an error, and so the tax has to be changed. But that's not as common when you're doing these types of questions. So what we have to do here is adjust it for 2022. So we're going to leave a space for debit. We're going to have a credit. And we're going to adjust retained earnings because it's going up times 1 minus 0.3, which equals 140,000. Now, that difference has to go to FIT liability because, again, we're in the same boat. Not enough revenue now. In the future, you're going to be unhappy. So FIT liability is going to be that 200,000 times the 0.3. So it's all based on the difference up here. So that's going to be 60,000. And again, we'll just make a little note. Liability, because more revenue declared in the future. So taxes will increase. So we've got to balance that with 200,000. Do you remember what account we use for construction? Construction in process or in progress or CIP to deal with. Okay. Again, I'm going to leave this now so that I don't get interrupted in the example 4, and I'll see you back here with example 4.